Good morning, everybody. Happy Wednesday. This is the morning show here on Stock Market TV. Spencer Israel, JC Parets, Steve Strazza may be in and out. Maybe today he says his allergies are on the fridge. I swear he's allergic to his own cat. I swear. I don't know why you have a cat. Allergic to your cat, but not my life, not my allergies, not my problem. What is my problem is the market today. We got to talk about what's going on. We got to do a little state of the markets. We got to talk about the hot corner. Very interesting. An old friend returning to the hot corner today. I want to talk about that. A couple of earnings on my radar as well. Looking at the calendar from last night. Who do we have? Super Micro. We had Upstart. We had Lyft. Yeah, that's kind of it. Not too many big names. Reddit tonight. That's interesting. And then our guest is a returning guest. Hasn't been on the show for a minute. Jason Shapiro from the Credit Market Report will be on the show at 9. We'll have Mary. We'll have Kenny. And that's the plan. So before I bring on JC, do me a solid. Hit the thumbs up button. If you haven't already, subscribe to the channel on YouTube so you get alerted every time we go live, because that's always fun, right? All right. JC's here. You're here. I'm here. Let's go.
All right. I was gonna save this for recess, but I spent $160 on baseball cards and basketball cards last night. I got a Shaq rookie, Kevin Durant rookie. I got a Doug Flutie with the Bears.
Wait, like not online? Like you went somewhere?
Yeah, I was at a birthday party and there was this attic shop situation across from the birthday party. It was like in a mall. Like it was one of those play things with right. And I was like, oh, I'm gonna go check it out. And I was like, holy shit. So I ended up spending $160. So I'll show off some of the goods in recess. But I'm very excited about that. I'm quite the collector. I don't know if you know that.
You said $150?
Like 150, 160, I think.
How many cards does that get you?
It got me probably about 20. The Shaq was $80. That was the big one. The rest were $2, $3. Like Jimmy Graham rookie card for $3. I'll buy that.
I haven't bought sports cards probably since I was 10 years old.
My father-in-law has a hard time walking, moving around these days. So he buys, but he's old school sports junkie. So he gets on that Facebook marketplace thing, and then he'll buy 10,000 cards for $100 or something like that.
Yeah.
And he'll go through all of them. And he puts aside the New York Knicks on one pile, any of the Miami teams, he puts it on another pile and gives them to me. So I have 297 John Offerdals in my
Wonderful.
Random Miami Heat cards from the early 90s, Bimbo Coles and Ronnie Cycli. Old school.
The second Bimbo Coles reference I've seen today. True story.
Wow.
Okay.
Really?
All right. Anyway, moving on. Enough of that. State of the market.
Not impressed.
No.
All right, ladies and gentlemen, we've got the Dow futures this morning down a full percent. That's 430 points to the downside. S&P 500 futures also down a full percent. That's 6,030, down 60 handles. NASDAQ 100 futures also down 1%. So pretty consistent across the board. 230 points to the downside. 21,550 for the NASDAQ 100. 30-year bond futures down a full percent. That's a bigger deal, right? So bond futures down a full percent is a much bigger deal than the stock market being down a full percent, just for perspective. Crude oil also down 1%. A lot of consistency here. Copper actually flat, which is surprising. Got hit yesterday morning, but considering the stock market and the bond market and copper flat, that's curious. Gold, 460, by the way, for copper. Gold down 1.5%, just under 2,900. Silver down a full percent. At 32, with the volatility index jumping up back above 17. Over in funny money land, you got Bitcoin down 1,300 points, 94,500. That's 1.3% to the downside. Ethereum back under 2,600, down another percent and change. Solana down almost 4% today, back under 200, down to 190. Spencer Israel, total crypto market cap. Are you ready? 3.05. 3.05.
Oh
Represent the
boy.
305. 305.
Oh
Mr.
boy.
305.
My screen is very symmetrical this morning. Just the order in which I have things listed. The top half is all red. Bottom half is all green. I've never seen that before.
And what do you have? What kind of things do you have in your bottom half out of curiosity that are so
The
green?
bottom half is the Dixie and the 10-year and Europe and Asia, and that's it.
China up a full percent this morning on the FXI.
Yeah.
A lot of relative strength coming from China. That sort of country rotation is consistent with bull markets, which we've been in, right?
And
Of course.
The Russell's getting smacked around again.
Which one?
Russell.
We can't talk. We can't hear you when you're not talking in your
Oh,
mic.
sorry, the Russell. Sorry.
It's okay. The Russell 2000 down this morning.
2%.
Um,
I'm looking at futures. Sorry.
Look at you, Mr. Futures Trader.
Yeah.
Yeah, Russell 2000 down 2% this morning. All right. So talk to me about what happened this morning. We had is it like the PCI or the PPI? What's the I this morning?
Well, first and foremost, was the Jerome Powell congressional testimony yesterday as good for you as it was for everyone else? No?
I didn't know that he had a congressional testimony yesterday.
Yes, you did. I'd be honest, I didn't.
I swear to God, I had no idea that he spoke in front of Congress yesterday. How on earth am I supposed to know
We
that?
talked about this yesterday.
No,
Anyway,
Strazza said that there was a speech. I didn't know that this speech was in front of Congress. I thought it was
yeah,
just one of his like random speeches.
he does it
We
like
give his
twice
speeches
a
all the time. How
he
do I
does it
supposed to know
like
Congress was involved?
twice a year. He goes in
Okay, how
front
am I
of.
supposed to know that?
I don't know. This morning we had.
And why would I care?
Yeah, no, I don't know. I don't know. This morning we had CPI. CPI for January coming in at 0.5% versus a 0.3% estimate. The prior reading was 0.4%. So yeah. Inflation.
Is that like a good number or is that like a bad number? Fill me in. For those of us who are just not for those of us
Well,
who
inflation was higher than the economists were expecting it to be. That's true for
inflation was higher than the economists expected it to be, therefore interest rates are up and bonds are getting hit, right?
that. Yeah, yeah,
Does that make sense? And
that
then
makes
so
sense.
interest rates are up, the dollar's up slightly, and some of these other European currencies, euro down 1/3%, British pounds down 0.5%, Canadian dollar down 0.25%, Swissy down 0.25%. All right, dollar yen up 1.3%. That's a big mover there. All right.
Yeah, yeah. On a year-over-year basis, with CPI of 3%, which
What's the
3%.
difference between the PPI is the producer price index? Do I have
Right.
that right?
There are different ends of the of the pricing spectrum, right? Consumer and producer. But yeah, and also the Fed doesn't even use the Fed uses CPI, but it's not like their preferred measure of inflation anymore. I think it probably used to be, but in any case, yeah, CPI. I think we're gonna do PPI tomorrow. I don't even know anymore, but yeah. So inflation, it's there. We have it. We
All
always.
right.
Right?
Well, that's great. So when I'm looking through the market and trying to kind of like weigh all of the evidence, the 200-day moving average, there's nothing magical about the 200-day. It could be the 195-day or the 207-day moving average, right? The 200-day kind of gives you a pretty good idea of that, longer term trend, right? And if prices are above their 200-day moving average, then, probably not a downtrend. And if prices are below their 200-day moving average, then it's probably not an uptrend, right? Like just as kind of like a simple rule of thumb. Again, not a lot of magic on that 200-day. Paul Tudor Jones loves that whole mantra, of, bad things happen beneath the 200-day moving average, right? Like that's when bad things happen. That's the type of environment where you can get, real massive sell-offs, like real, like blow up your book sort of sell-offs. Um, So when I'm looking at different assets relative to their 200-day moving average, when I see something like the German DAX making new all-time highs again yesterday, and I look at the S&P 500, Dow Jones Industrial Average, NASDAQ 100, Dow Jones Transportation Average, Russell 2000, Midcap 400, all of them are above their 200-day moving average. 9 out of 11 sectors in the United States are all above their 200-day moving average, except for healthcare and materials are the only two sectors that are not above their 200-day moving average, and they're about, one is less than 1% away, one's less than 2% away. When I weigh all of that evidence, I'm just not seeing an environment that leads me to believe that markets are deteriorating. Could they deteriorate from here? Sure. I don't know what's going to happen. Neither does Spencer. Neither does anybody else in the chat, right? We don't know what's going to happen. Today could have been the high for the DAX, and now the DAX crashes. It could. I doubt it, right? Because that's the lower probability outcome. The much higher probability outcome is that this strong market breadth that we've been seeing most likely continues. Like I said, it could start to deteriorate. Of course, anything could happen, but it hasn't yet, right? So the weight of the evidence suggests to me, when I ask myself the question, all right, what should we be doing today? Should we be spending our time looking for stocks to buy, or should we be spending more of our time looking for stocks to sell? Like, what should I be doing today? Like at work, I wake up, pour myself a cup of coffee, kiss my family, come over here, talk shit with Spencer and Strazza and our guests and Like, what should I do today? We have a meeting today at 11, our analyst meeting. Like, what are we going to talk about? We're going to talk about which stocks we want to be buying. Because in bull markets, trust me, I've studied every bull market in history. And as it turns out, facts only, as it turns out, investors who own stocks do way better and make a lot more money during bull markets than investors that don't own stocks, right? Like, that's facts only, right? So today in our meeting at 11 o'clock, what are we going to be talking about? We're going to be talking about sector rotation. We're going to be talking about opportunities both in the United States and out of the United States. We're going to be talking about opportunities in Latin America with that strength in copper, with that rotation that we're seeing internationally, that broadening in participation, that breadth expansion that we are seeing across the globe that is perfectly consistent with bull markets. And anybody who tells you that breadth is not expanding clearly has not taken the time to count, because I have, and I can tell you for a fact that breadth is expanding because I looked, right? So that's really what this is about. How should we be spending our time, right? What should we be doing? It's not like we're coming up with these conclusions and then just like, oh, that's what we think, tough shit. No, we're coming up with these conclusions to decide what our calendar looks like. What are we doing today? We're looking for fucking stocks to buy. That's what we're doing because it's the fucking bull market. That's why. How do you feel about that, Spencer?
The trick is going under the surface, right? And not just being married to the indexes all the time.
That's right. That's
Right.
right. So think about the market like in 3D. You know, the market is a 3D chess game. Most people are playing checkers, right? Like I was talking to my father yesterday. My father, a couple of weekends ago, as I mentioned on the show, texted me like, "Oh my God, these tariffs, stocks are going to crash," right?
Mhm.
I'm like, "No, the opposite. U.S. stocks are going to rip, and the Chinese ones are going to do even better." That's what I told him at the time, and he's like, "You're crazy," and I'm like, "Yeah, the media wants you to believe that this is bad for the market because the media doesn't like the guy who's in charge, and the media doesn't like his first bestie, and the media doesn't like all the PayPal mafia guys that are running the government or everything like that. They don't like that. So the media wants all of these things to be bad for stocks so they could say, aha, we told you so. But here's the thing. As it turns out, it's not bad for the stock market. In fact, it's been great, like fantastic, right? As I told my father a couple of weeks ago, and he's like, that doesn't make any sense at all. I'm like, exactly, Dad. Exactly, right? So the mainstream media that's been telling you about how bad all these things are just look like fucking idiots, right? Which is why CNN completely fired everybody and are starting from scratch. MSNBC is firing everybody and starting from scratch. Like all these media outlets, like, you know, they told you all these lies and they have been proven wrong. And anybody who's watching knows right? It's a
I
fucking disaster over there.
I
So,
think let's not forget that there is a difference between like the market and like the rest of the world, the rest of like life in society. The market is not like the end all be all for everything. It is
of course it is. What do you mean it's not? It's the only thing that matters. What do you mean?
it's the only thing that matters from like a financial perspective,
No, it's
right?
the only.
And
It's the market is the final arbiter. So
um,
you could tell me that something is good or bad. The media could tell me that something's good or bad, but the market will actually tell you whether it's good or bad.
I don't know. I don't know if I buy that, right? I
Are you
mean,
kidding me? Have you not been paying attention?
all right. I challenge you to go to Israel and tell them that everything has been great for the last couple years. That you will not get a good reaction.
I mean,
Okay.
I haven't been to Israel. I have friends there, and
Yeah.
the conversations that I've had, and again, I don't want
Everything
to like
has not been great for
I
the
try to
past
stay
couple of
hold on. I try to stay in my own lane, right? But
right.
and you could tell me how many conversations you have with people in Israel and tell me if that's different. But the conversations that I've had with people in Israel, and it's been, let's say, a dozen, all of them tell me that nobody cares. It's business as usual. So you tell
Yep.
me unanimously, they're telling me that nobody cares. It's business as usual, and the stock market is acting accordingly. Is everything great in Israel? Probably not, right? Is everything great in the Middle East in general? Probably not. Is it ever, right? But the people there, the conversations that I've had, which again is not a good sample size of the entire country, they're telling me that nobody cares, it's business as usual. And the stock market keeps making new all-time highs, and it's outperforming almost every other country in the world. So, yes, I think the
And
market is telling us that.
in terms of in terms of the rest of the stuff in America, like there are other if you want to be upset about something that has nothing to do with markets, there are many other things that are concerning that are happening in our government right now that have nothing to do with the stock market. Right, the stock market is its own thing, right? So, and and as you always say, as everyone always says, it is forward looking, right? So it is, and it's a discount mechanism. So,
And then also just because I'm not saying you, Spencer Israel, but
I
like
know,
you in general, just because you think that the market should care about something doesn't mean that the market does,
of course,
right?
absolutely,
Right? Like people are
absolutely,
like, "Oh my God, this is terrible for the market." The market probably doesn't give a shit. By the time you know about it, the market most likely already priced that in, right? Because there's people with way more money, way better information that get it way faster than you. So by the time you, Joe Schmo, you know, find something out, you're probably the last to know. The market
I'm
already priced that
look,
in, right?
this is a market show. We look at things through the lens of markets, through the lens of investing and trading. There are other lenses through which you can look through life, and those lenses may have different. You may have different feelings right now. Totally fine, right? But from a markets financial standpoint, hard to argue that everything is not okay right now. There are other reasons if you want to look at the rest of society, it's totally fine. But what JC just said, and those things don't necessarily have to do with markets right now. They might later.
Like
They
these,
might.
like all these banks with all their all their bonds and derivatives, like they should blow up. Maybe you think they should blow up, but the market is acting completely different. As
Everybody wants to call a blow up. Everybody saw The Big Short. Everybody wants to be the next, you know, Steve Eisman. Was that his name? Steve Eisman.
I don't know. I don't watch those
Uh,
stupid movies. I lived it.
um, Everybody wants to be the next Michael Burry. Everybody wants to call the next blow up.
I don't think people want to be that guy. That guy seems very like
Are
angry
you
and weird.
kidding me? Everybody wants to be that guy. Everybody wants to be Michael
I'm pretty
Burry.
sure. I'm pretty
Are you
sure he's been
kidding me?
embarrassing himself for a long time.
Are you kidding me?
I don't think so.
Everybody wants to be Michael Burry. That's a fact.
I definitely do not. I'm
You
perfectly happy being me.
maybe you don't. Everybody else does.
Yeah, I don't think so.
They do. They do.
They want to be Michael Burry. I'm pretty
Yes.
sure most people
Yes.
do not want to be that
Everybody
guy.
wants to be the one contrarian to call the top and nail it.
Well, that
Yes,
it's
they
not a
do.
contrarian call to cut the top because so many people are calling the top. In fact, you have more bears among individual investors since November of 2023. So if you're calling the top, you're not a contrarian. Like you are with consensus.
All right. All right. Good call. Spencer in the chat. What do we have any charts here? I brought up the one of the number of sectors above their 50-day moving average, which is at 10 now, 10 out of 11. Pretty freaking good, right? What else do we have here, JC? Do we have any charts
Well, I mean,
for the
yeah, we got
people?
plenty of charts, but let's stick with this. You know, the percentage of S&P 500 sectors above their 50-day moving average, 10 of them. The percentage, this, excuse me, the number, not percentage. The number of S&P sectors above their 200-day moving average is 9 out of 11. You know, I don't know how helpful this is, to be perfectly honest. You know, I suppose, and I personally don't really do this. Maybe I should do more. Maybe I should do more of this. But you know, when the percentage gets, you know, towards zero, where none of them are above their moving average, you know, you tend to get some washout levels. You know, they could be buying opportunities, I suppose. I don't really look at this. 50-day is
Too short
too
term for you.
noisy for me.
All right.
Yeah, I listen, and again, I respect it. And I know very smart, very successful individuals who do use this very successfully, I might add. I do not. I know very smart, successful people that are watching ETF flows and understand how to use that to their advantage. I do not, right? So I know very smart people who use stochastics, for example, to measure momentum and whatnot. They use various formulas for stochastics. I do not, right? So I think that there are a lot of tools in this market. I think that there are a lot of data points to this market. I think it's probably best for you as an individual, as an investor, a professional, whatever, to decide which tools and strategies are best for you, for your objectives. And something like this, full disclosure, I love it. I respect it. It's a beautiful chart, by the way. Shout out Grant. It's not something I look at.
All right.
I don't know what to make of this. Like, okay, great. 10 out of 11 sectors are above their 50-day moving average. Like, so what if it was 5? Now
Well,
it's 10. Like, what? How would it
isn't
change for me if it was 5 or 10? Let's
isn't
just
it isn't this chart just reiterating what you were saying the other day, the other week, which is that breadth improved recently, right?
I mean, I don't know that necessarily it improved recently. I mean, the
Oh,
behavior of the market breadth has
it
been
did.
consistent for. I mean, you started to see some breadth deterioration early in like February, March of last year. It led to a correction, right? Like it was like a 6-month correction where most stocks did nothing
No.
into the summer of last year, if you recall.
Well, here,
And then breadth improved, and then it's been just consistent improvement and rotation ever since.
all right, but also there were 0 sectors above their 50-day in at the start of the year, right? So we've gone
Yeah,
through.
it was a tough. It was so. This is a good point, Spencer. So December, a lot of stocks got hit in December, and because this measure is the 50-day moving average, it's very short term. So it's very easy to fall below the 50-day moving average, right? It's a lot harder to fall below the 200-day moving average, right?
Yes,
Which is
for
yeah.
sure,
So
100%.
yeah, great example, Spencer. I'm glad that you mentioned that because that is in fact maybe the biggest reason why I don't use this because
Too easy.
it's so
Okay.
noisy, right? Now somebody with maybe a more short-term time horizon than me, um maybe with somebody with a different strategy and different objectives can use this, and I know for a fact that they do, and if they find it very valuable for their purposes. For my purposes, I do not, and that's okay, right? It's
All right.
okay.
All right, we got a bunch of people hanging out backstage. We got Jason Purrs who stopped by to come chill with us. We got Kenny. We got Jason Shapiro. Why don't we bring Kenny on?
Yeah, let's bring Kenny on,
See
and then I
what
want to
he's
bring
doing.
Jason Shapiro and Jason Purz on at the same
Yes, I
time
concur.
because they speak a very similar language, and that's going
They
to be a
do.
lot of fun. So let's do that. Let's bring in Kenny, and then we'll get to Jason and Jason.
They do
Ooh,
indeed.
double J's. 3.
It's been a long time coming. They ain't come from my club, they tug it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Oh, Jefferson.
What up, brother?
Is
We're
that a
short
train
CBS right
station
now.
hat?
Think about 60. Let's go.
What's that hat you're wearing?
Oh, that's the original Think of Swim hat, man.
Wow.
Beautiful,
Oh.
right?
I mean, it's no suck my NASDAQ, but it'll do.
It's a beautiful hat. I love this hat. Circa 2017. By the way, if anybody works there, I'd like a new one. I've called the company 10 times to see if they had any in the archives, but none of them. What's going on, boys and girls?
We're getting them some feedback in the chat that this show has become right-coded lately. Right-coded.
I don't know. It's over my head. What's right-coded mean?
I think that they're saying that we're too Republican.
Oh, I could conjure up my old Democrat liberal ways. What do you want to talk about?
Yeah, just to reiterate to you guys, I don't give a fuck who your president is.
Yeah, neither do I.
I'm just trying to profit from the whole thing.
Yeah.
And if you've been selling your stocks because you don't like the president, you're an idiot.
I'm an anarchist, so you don't want to get me started.
JC, I admire your shamelessness. I do.
I don't care who your president is, whether you live in America or in fucking Argentina or in London. I don't care who your president is. That's not my problem. My problem is how I'm going to make money from who your president is.
I walked into a battle. I like this. All right.
You know what I'm saying?
All right. We can talk about that some other time. Let's do schmooze.
Please, Kenny.
Let's do a schmooze.
Save me from this.
Religion and political schmooze on Thursday night, so we can have no friends.
Save me from this, Kenny, please.
Yes.
All right, CVS.
Oh, well, I just want to tell you one thing. Listen, I've been up. Me and Solid have been up basically for 48 hours straight. I don't know why, but last night into the aftermarket, we started trading SMCI. And it got so damn exciting. Let me just show you the aftermarket last night. The market, we stayed on the air till about 4:30, and then we just never stopped talking. We just kept going because when you faux show bro on an earnings report, the trade continues to work at just an enormous clip. So let me just find that data for you. I'm unprepared for the test right now. Hold on a second. I'll put it on a 5-minute in 2 days, and you'll see it in a second. All right, there you go. So because I'm a bear trapped in a perpetual bull market, this trade, the faux show bro, remember, the reason it works so well is it victimizes the bears. It makes them think, ooh, we're onto something. This time is different. It's never different. We never go down. So if you're trading stocks like SMCI, I'm going to go out on a lim and say this is a real company. This isn't some pump and dump piece of shit biotech stock that we're talking about like AIFF, which we'll get to that some point tomorrow. But when you see the catastrophe out of the gate, this massive reactionary candle, when you have a reactionary candle that's so massive, there's always a counter trend move anyway. So we're not courageous enough to buy that first dip. And this is a 5-minute candle. Let me show it to you on the 1 minute because it shows it a little bit better. And then I'm just going to skedaddle. By the way, if anybody's still short CVS, I don't know what the hell, it won't break 60. We're short CVS right now if anybody cares. So
I love that you're short. CVS, not X.
Yeah, CVS, because again, gapped up stocks, I short them. So right here, there's my reversionary trade. Not looking to short it, but right there, that red line, that's me. So when a stock breaks out and then breaks back below the price it broke out from, that's where I short. And I've been sitting here miserable for the last hour, just waiting to see if this thing breaks 60. We're up a little bit on the trade because we got short around $60.80, and it just doesn't want to budge right here. So we're probably going to wind up getting out of this thing. Again, I'm not going to cover it unless it starts trading 60.50 right now. But let me show you this SMCI, how awesome this was. So there you go. There's the faux show. When a stock breaks a new low, then comes back, that's the fake out, shakeout. And then look at this monster move. That was a 10-point move. Now, again, I wasn't in that, but that pattern replicates itself continuously. So this one, where it broke that recent low, came right back, faux show, test the VWAP, and then just for good measure, right under the VWAP, breaks the recent low, faux show, then it breaks the VWAP. We're long right here. And this is just the jiggle. So this is what CVS is doing. It's jiggling and shuffling along, making a new decision. And of course, usually we resolve ourselves to the upside because the market never goes down.
Kenny, how long are you willing to wait? So in CVS, for example.
Well, CVS, I'm willing to wait till about 9:25 because if my stock's not doing what I need it to do, I don't like to hold into the open because the opening candle is just going to be ridiculous and it just makes fools of us all. Yep. So if this thing's not under 60 within the next 15 minutes, I'm probably just going to bail.
Got it.
So speaking of being patient, look at the patience that we had here. So just jiggling and shuffling along. If it's at the VWAP, not making a new decision, you got to wait for the stock to decide. And I'm the decider. And then it breaks the highs of the pre-market, the aftermarket, and we're ripping. And then we sold into this move. Fast forward in today, again, beautiful day's pay. And let me show you what we trade. We were trading NQ futures in the room last night because we just couldn't sleep. And if you're not trading, if you trade futures, friends, look at these beautiful moves. There it is. There's the faux show, and there's the VWAP bro. And then you get another opportunity, faux show, bro. If you're trading futures, my friend, get to know VWAP because it's so clean. There's no market makers. There's not much to worry about. And it's just wonderful. And again, obviously, you've seen the economic data roll over. But that's what we're doing right now. So SMCI, CVS, we're going to be watching Lyft. I'm looking for Lyft as a buy. Right now, it looks awful, but let me take a look.
Down 13%. Love it.
Right. Here you go. That's my trade right there. So as long as it doesn't break the pre-market lows, consolidation right around the VWAP, you break out through that 1262, I'm in. I'll see you guys later.
All right. And on
I
that note,
absolutely love it. Well done, Kenny. Well done, sir.
Peace, brothers.
You know what I love? A couple of things there that stand out from Kenny. First of all, the faux show bro sounds funny. Sounds maybe even complicated. It's not. Talking to Michael Nas yesterday. Get Michael on the show, please, Spencer. I want to talk about some of the things he's been working on. He's coded the faux show bro, and it's live, and it's working. It's awesome. So not to let everything out of the bag, but we'll be showing you the algorithm that has been written and working very successfully, I might add, shortly. That's number one. Number two, if you throw up slide 2, I think it reiterates why one of the biggest reasons I love Kenny's strategy, because it is a portfolio diversification, because not only are you changing time horizons by trading intraday, but you are also in a mean reverting strategy versus a trend following strategy that we tend to incorporate more often than not. So I'm seeing here, so he's shorting this in a short-term basis. It may work, it may not. But that's the strategy because the stock's up, what, 10% or something right now? It's up 9.5% here pre-market. So he's looking to fade that because that's the strategy. When you zoom out, I like it from the long side, right? It's a great example of how, from a short-term perspective, there's a trade that I agree with Kenny on fading that. I love that strategy. Maybe it won't work in this particular stock, but it works quite often, right? But that doesn't change the fact that from a longer-term perspective, I like that failed breakdown below those former lows. And if we're above those former lows from the great financial crisis, I like CVS from the long side. Great example.
there we go. All right. Jason Purrs, are you around? Jason's here. What up, Jason? How we doing?
Hey guys, how are you?
Jason Purrs, what's up, my man?
Good, man. Just chilling. Excited to hang out with you guys this morning. Jason Shapiro's coming on. That'll be exciting.
Bring him out. Let's go.
He's here.
Let's do it.
All
Let's
right.
do it.
I'll do it. Jason Shapiro, are you ready? I think so.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Shapiro, how are you, sir?
Yo, Purse, how you doing, man?
Hey,
Long time
good,
no
man.
talk.
How are you?
Looking good, brother.
Yeah, I'm good. I'm excited to hang out with you today, man. I got on, and you were coming on today, so JC mentioned
Only
we could
because
hang
of
out
you.
and talk.
I only
I'm
come on
excited.
because of you, man.
You guys see this bromance that I'm dealing with? You see this going on here? Jason, we didn't make it to New Orleans this year for the Super Bowl. Maybe next year?
We might be
Gotta
going there
kidding me,
sooner than
dude.
later, though.
I'll be dead before we're going to no Super
So
Bowl.
Jason Shapiro, Dolphins fan like myself, very frustratingly so. Oh, you're rocking the Dolphins gear.
Dude, I rock the Dolphins every day. Here's my hat for when I go down to my garage to smoke, since my wife doesn't let me smoke in the house. I got my Twins hat.
I just got a Waddle rookie card yesterday for $3, $5 for the Waddle rookie card.
Ooh,
It's
nice.
great.
So Jason does not go to Dolphin games anymore. He says the next one he's going to go to is the Super Bowl, which is why he hasn't been to a Dolphins game in quite some time.
50 years.
Jesus Christ, Jason. Talk about calling the top. Jason became a Dolphins fan after they won their last Super Bowl. Is that right?
I was 7 years old. First team I ever heard of. I jumped on the bandwagon. I went FOMO. And I've been waiting 51 years for...
lesson learned, Jason? Lesson learned,
Yeah, it was terrible. And meanwhile, I grew up in Jersey. I should have been a Giants fan the whole time.
See, if you had known that you should have been fading, right, as opposed to trading, if you were fading, then that would have been very successful.
Let me
right?
put it to you this way. They won the bowl in 72, 73. They made the AFC championship in 74, 75. Okay? 1976. They lost the AFC Championship in 75. 1976. So they're still at the top of the game, right?
Yeah.
They're still one of the top teams. 1976, the Tampa Bay Buccaneers come on the scene. They go 0-14.
Yep.
The next year, they go 0-12 and win their last 2 games. What was the bet? What were the odds if you took the Bucs to win the Super Bowl before the Fins at that point? What would you have gotten? 10,000 to 1?
Easy.
And that was the bet.
Yep.
Because they won 2 before the
Won
Fins
2.
ever won 1 again.
Yep.
Don't get me started. It was
a
the
sad
worst,
state of
the worst-
affairs.
the worst
Very
thing.
nice history lesson there for those who are unaware of the frustrations of us Dolphin fans.
Really.
I wasn't alive yet, but I've been hearing about that 1972 team my entire fucking life.
You know something? I'll tell you one more story, then we can get into the markets. When I was in college, I went to college in Florida. Mercury Morris at the time was going around, and he had some problems after football and all that, and then he recovered, and he was going around talking to people about, don't use drugs and get your life together. And he gave a talk at my college, and I went because it was Mercury Morris. And afterwards, we all gathered around and we're talking to him, and he let me try on his Super Bowl ring. I had it on my finger. I'm a 19-year-old wise ass. He's talking to all these kids. I literally, it was in a lecture room. I walked out of the lecture room and was outside and could have gone home with Mercury Morris's Super Bowl ring. But being the good man that I am,
that you are.
I went back in and gave it to him.
I'm not surprised by that story. I've actually heard quite a few stories of Merc, like taking young kids for a drive, like in his Porsche, and I've heard he was very friendly. They used to all work out at that gym up by by the school. What is that? In Fort Lauderdale? I think it's Bay College now.
I have no idea. I went to school in Tampa, so
Bay College, something like that. All right, Jason. If you ain't fading, you ain't trading. I really appreciate the way you look at markets where you're looking for vulnerabilities, and stop me and correct me if I'm wrong at any point, but you're looking for where the market is most vulnerable, where positioning is likely very skewed in one direction, and looking for an unwind. And I really like that a lot, because in my experience and the way I learned it is that we're not in a reversion to the mean business, but we're in a reversion beyond the mean business, particularly from extremes. So how close am I?
Yeah, no, I like to look for my particular trading style. I like to look for extremes in positioning and sentiment. And then I'm looking to go the other way when that happens.
And it's not easy to do that. Sentiment is very, very difficult to quantify in my experience. We do it by bringing in a lot of data and observations, which makes it imperfect. And we know it's imperfect. We know it's incomplete. And that's okay, because we know that going in. How do you gauge sentiment, right? I just told you kind of how we do it. How do you do it?
I look at a lot of data, and I listen to a lot of stuff, and I read a lot of stuff. I spend all day reading what people are saying, listening to these people on the television, on CNBC, on Bloomberg. That's how I try to gauge overall sentiment. But positioning is a much bigger part of it for me. And I use the commitment to traders data to really gauge positioning, because that is actual positioning data, right? I like to see those things line up as best I can. But the COT really drives me, because I like to say it keeps me out of trouble. I might think that everybody's bullish here and I'm looking to go short, but if the positioning in the COT is not confirming that, then I'm not doing it. I always say COT isn't necessarily the best predictor of where a market's going to go, but it keeps me out of trouble. If they're not super long there, I'm not getting short. Do I miss trades sometimes before that? Sure. But I don't care. You know what I mean?
Yeah, you're going to miss out on trades.
I mean, I'm always
you're waiting for a better pitch.
Each one of them moves up and down every day. So I'm missing out on trades every day in theory, right? But I trade a very specific process that has a very specific goal in mind, and that is what keeps me doing that.
So the COT is great for the futures market, of course, right?
Sorry.
The COT, the Commitment of Traders Report, is great for the futures market, of course. But what about some individual equities and something like short interest? Where does that play a role?
I've never found, and we've tested, but I've never found short interest to be helpful. It's very delayed data. And
for now, right?
oh my God, trust me, we're already. Listen. The COT is delayed by 3 days for no reason.
Right.
They just appointed a new CFTC guy yesterday. CFTC are the people that release the COT data. We're already pummeling him. He's a tech guy too. Like there's no reason they can't gather that data and have a daily data. No reason. Zero. Other than the fact that
I'm not
lazy.
asking you specifically, but for those of you in the audience, have you seen the Commitment of Traders report? Like when you see it, you'll understand why everything is delayed and half-assed, right? I mean, Jason, like for people who haven't seen that report, it's way worse than you think, right?
I mean, I don't know what you mean by worse, but
I mean, the actual page of what it looks like. I mean, we have the algorithm.
Well, the page is ridiculous, but that's why we make our own.
Yeah, we make our own. But what they release is a fucking joke, Jason.
It's the CFTC. We talk about it, and we're obviously getting a lot of headlines these days about how inefficient the government is. The CFTC, I believe, is the least funded department in the entire United States government. So, there you have it, right? But hey, we got this tech guy coming in, who's I think you
guys are writing letters and pummeling him with
pummeling him. Yeah, we're trying to get him before he actually takes the position. I'm trying to get an interview with him so that I can pummel him because there's just no reason.
None.
There's no reason this data can't be collected and released every day. But
in real time, or at least once a day, right? To your point,
once a day would be more than fine. More than fine.
And then the short interest shouldn't be 2 weeks delayed or whatever it is, right?
No, it shouldn't. But anyway, I've never found short interest to be that great. But look, you can use COT for stocks anyway, because let's say, for example, we find people are mega short the stock indices here. Okay. That means that there's a good chance that should the stock market go up, it's going to squeeze up pretty far. All right. Well, we know that X percent. This is not supposed to be on.
That's the head of the CFTC calling you back, Jason, right there.
Right.
Tell him you're busy with more important people.
Right. We know that if the stock market is to go up, it probably gets a good squeeze up. If in that case, we know that a large percentage of stock moves are a function of the stock market in general over time, right? And let's say that the data also shows that people are mega short energies. So they're mega short energies. They're mega short the stock market. So why not look to get long energy stocks, right? That's a way to do it. One example to do it that's worked. You have a million ways to do this. Currencies, you can read the currencies. Okay, they're mega long or short currencies. Well, I got these stocks that are highly correlated to the dollar, which there are quite a few of, right? Okay. If it looks like there's going to be a big move up or down in the dollar, I can make a decision based on that data, right? So there's a million ways that you can use this stuff, including for individual stocks. We have guys that do it all the time.
I know Jason's probably chopping at the bit to.
I got one. Go ahead, JC.
Well, I was going to say, Jason, when you're looking at the positioning, because I know there's a lot of people who have never looked at the Commitment of Traders report. And we're talking about commercial hedgers, arguably are the smart money. And then you got your speculators, you got your large speculators, your smart speculators. How do you separate speculators, or do you include them all? Do you extract just some of the specs? Like, how do you think about that?
For me, I'm looking for massive extremes. So, and you got to know, let's take it. There's three groups, right? Commercials, which are hedging, right? And then the rest of everybody is a speculator. Me, you, whoever. And they divide it into what they call reportable and non-reportable. I call them large and small, because if you have over a certain amount of contracts, you have to report that, right? Because they're trying to stop people from, cornering the market, right? So those are large speculators, and then everybody else that doesn't have to report is a small speculator. I like the large and small speculators to be super one-sided.
So you combine them both?
Yes. Well, I do them individually, but essentially combine them both. And then the commercials, of course, are going to be one side the other way. And you think like, well, if commercials are hedgers, hedging costs money. And so the people that are opposite that, the speculators, capture the money that hedging costs. And to me, that's what trend following is. futures trend following, right? They make money over time because they are essentially taking on the risk that the hedgers don't want to take and getting paid to do that. If they weren't getting paid to do that over time, they wouldn't do it. And the hedgers wouldn't have anybody to hedge with, right? It would just be all hedgers in the market and they wouldn't have anybody to make them a market, right? So that makes sense to me. So why do I fade that? Well, I fade that only at massive extremes, right? At massive extremes. When speculators are just so long something, then I'm looking to fade it, right? So it's not like commercials are smart money necessarily. They're hedging money, but I have found that speculators, when they're all wind up on one side, that's what, and you look at trend following returns, they make money and they have huge givebacks. Make money, have huge givebacks. And when they tend to have those huge givebacks is when they're all loaded up to the same side. And that's what I'm trying to capture.
Jason, is it fair to say that from those extremes in positioning, those extremes have unwound 100% of the time throughout history? It's just the timing that is the difficult part, but mathematically they've all unwound at one point or another. Is that fair to say?
No.
No?
Nope.
Okay. Can you tell me why?
Because let's say speculators are super long something. Sometimes we've witnessed the market will keep going up and they'll unwind into that going up rather than unwind into the market going down, right?
Sure.
Which is why things like stops are important, right? We saw that in cocoa over the last year. At one point, speculators got super long cocoa, and we were looking to get short. I was looking to get short it. But then as the market kept going up, they started to get out of those longs. So therefore I couldn't get short it. Thank God, because cocoa like doubled in the next 4 months, right? So
the positioning unwinds. It doesn't mean price needs to go with it.
Doesn't necessarily. For me to make money, that's how it works.
Of course.
But not all of my trades make money. You know what I mean? And not, like I say, COT is not necessarily a great predictor. Right. It's a great risk manager, A, because it keeps me out of trouble, and B, it's just a great possibility of risk reward. If everybody's super short and we start to go up, then there's a good chance that the move up could be big, right? Yep. Whereas if the market keeps going down, well, you can stop out, whatever. So you can risk $1 and make $5. And that's kind of, as you know, all trading really is. If you're going to think trading is about your ability to predict the future better than everybody else, I think you're going to find you're going to have trouble.
Yeah.
What you want to do is get into situations where you're risking 1 and making 5. And then you can be right half the time and you'll crush it. That's really all it is, right? And not all of my trades make 5, but you know what? Sometimes we get like a 10-to-1 risk reward. It only takes for me 4 or 5 trades a year where I'm making a 5-to-1 risk reward. And then I can, let's just say it's 5-to-1 on 5 trades. If I'm risking $1, well, I just made, $25. And then I can have another 5 trades where I lose 1. Okay, so I made 20. Okay, $100, I made 20%. That's all I need, right? It's hard, just like all trading is hard, because of the same reasons. You have to be very patient. You have to be very disciplined. You know what I mean? Just like anything. There's no trading process that doesn't require patience and discipline, in my view, anyway, right? But that's kind of the idea.
Jason Shapiro putting on a clinic. If you guys are paying attention, write down what he said. He's spot on. Well said. Jason Pers, I know you had a question. What do you got?
Yeah, so as traders, we always have our favorites. So you're watching CNBC, Jason. You're always talking about this. But who are your favorites to fade? Like, who comes on and you're like chomping at the bit, like, oh, I'm excited this guy's on or the girl's on. I'm excited to try to fade them.
It's more a question of consensus than it is individual,
So if you have more than 1, 2, 3,
want to hear them all. Sometimes you'll be listening to this stuff and it just becomes so obvious because person after person after person, guest after guest after guest just comes on and says the same thing. And I'm just like, did this person not watch the last 10 people that came on here? Because he's saying the same thing. And how can you be adding any value whatsoever if you're saying the same thing that all these people are saying, right? We go back to, early 22, was it, right? 23, early 23, I guess. And every one of them came on there. Recession, 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 recession. I'm like, I'm not even saying you're wrong, but how does that add any value? What's the point of you coming on TV and saying the same thing that the last 10 people that were just on here said? It doesn't make any sense to me. So I think that's more important, is consensus. Now, are there individual people that tend to over time be horrible? Yes. And you can sort of get a feel for that. For me, my favorite, is Dan Nathan personally. However, Dan Nathan, just for the record, bought a put spread just yesterday on TLT. And look how he's doing now. He's crushing it, right? Having said that, when I look at his positions, the great thing about him is he has to disclose his positions on their webpage, the CNBC webpage. He has the most longs in stocks that I've ever seen him have. This guy's a perma bear. He has the most longs in stocks that he's ever had. So he hedged it with a TLT short. And hey, it looks like he got it pretty damn right. So again, just like no one gets it right all the time, no one gets it wrong all the time. But over time, and it's a thought process, that you can recognize because you've had that thought process. We've all gone through this. We're all people. You know what I mean? None of us really think that much differently than anybody else, right? And I think a perfect example is a trade he made recently. If you remember, UAL earnings came out and UAL was crushing it, right? So Dan Nathan decided that rather than buy UAL, he was going to buy American Airlines stock because it was going to catch up.
Oh, the catch-up trade.
The old catch-up trade. Buy the weak one, right? As if the market doesn't know, right, about UAL, right? And sure enough, look what happened. UAL has gone straight down since then. Like, you don't do that. It's hard. Can it work once in a while? Yes, anything can work once in a while. But over time, is that type of thinking going to work? I'm going to buy the laggard because I'm smarter than the market, because the market doesn't see that UAL is up 30% and American Airlines up 10. The market doesn't see that. Only I see that. So I'm going to buy the one that's up 10 instead of the one that's up 30. It's such bad thought process. And so people that think like that, I kind of like to fade because I have thought like that and I know what the result is. It's bad, right? I have seen other people think like that and I've watched what the result is. Over time, it's bad, right? So he's kind of a favorite fade of mine, although, hey, Dan, you got the TLT put spread, baby. So good for him.
I'll tell you something about Dan Nathan. I don't watch I wouldn't even know where to watch basic cable these days. Like, I don't know if you watch it on the website. I don't even know. But,
he does a daily thing on YouTube.
Oh, does he?
And I have to say, everyone says I hate this guy, but I brought more freaking views to this guy's freaking YouTube page than anybody. They should be paying me.
Well, I'll give Dan some love. When I first started doing TV and I was hosting CNBC Fast Money and all that stuff, like, he was one of the guys that, gave me like advice and like, took care of me, like, hey kid, do this, do that, and I don't forget. So shout out Dan Nathan.
Good for him.
Also very well connected in the restaurant scene in New York City. Has taken me to quite some nice places over time. So
he's got, I don't know where he gets his money because we watch his trades all the time and he loses money like hand over fist. He must get paid well there. I know he also comes from a rich family, so
I don't know. But let's talk about current markets and the current positioning. Where are you finding ridiculous extremes right now?
Nowhere.
Really? Nothing. Wow. How often is that the case, you think?
A couple times a year. We had the same situation last year at this time where there was nothing and I did nothing. But
is that a seasonal thing, you think, or is that just coincidence?
No, I think it's coincidental.
Yeah.
I think it's interesting. Again, you talk about ways to use the COT. So there were last year at the beginning of the year, there was nothing crowded. So I, as a counter trend guy, didn't have any trades. And what happened when there was nothing crowded? The trend followers killed it because there was nothing crowded to stop the trends from continuing, right? And then in about March, April, we started to see things get crowded. And that's when the trend followers gave back a lot of that money, right? So not crowded can also be something to confirm. If you're a trend follower and you're in stuff that's not crowded, you can feel pretty good about what's going on, right?
I really like that perspective a lot. Like, if you're a trend follower and there's nothing crowded there, then it's probably a good time to be following trends. That makes a lot of sense.
Relative, would you rather be in a trend that nobody's in, or would you rather be in a trend that the whole world is in? You tell me. From a risk reward perspective, which one would you rather be in? If the market is a discounting mechanism, which it is, right? Would you rather be one that has not been discounted or one that's being overly discounted? I think it's pretty simple, right?
What was recently at an extreme that you've been seeing unwind?
Orange juice was at an extreme.
Yep.
Extremely, yeah.
You know, on the COT. Back in, sorry, I'm just looking at it right now. But yeah, back in sort of December, it was reaching that. And it's gone from what, 550 to 400 since. The silver we saw from our readings were at an extreme back in the beginning of the very beginning of the year. That was one.
Isn't coffee getting pretty crowded now?
Coffee's starting to get pretty crowded, yeah. But again, it's doing kind of what cocoa did, at least as of last week. Coffee was showing very crowded, but then came off last week as coffee was making new highs. So, does that mean it can't go down? No, it doesn't mean that, but it just means that I ain't going to be involved, right? It's what cocoa did, and thankfully that data helped me in that cocoa situation because I never had to short it, and I just watched it, double. So.
Jason, how do you feel about something like China? I like you like to look for, crowded positions or a lack of a crowd. And, for me, the work that I do, China has been left for dead, sentiment at washout levels. And we've been seeing that unwind over the last several months, or in terms of price. I don't know if sentiment, I can't tell you that sentiment has been unwinding, but certainly price has been mean reverting. How do you think about something like that, or do you not think about it at all?
I do think about it, not purposely, but because I hear it every day. I personally think that you're not going to like it, but I, right from here, would never own Baba stock, ever.
Baba,
yeah. Every day I hear someone talking about Baba. Now, in fairness, the thing's going straight up. So if you're owning it, you're loving it. Who cares what Jason Shapiro says, right? I don't fake the tape, right? But to me, that's all I hear every day. Baba is the cheapest stock in the world. Baba, Baba, Baba. I hear Baba every single day from all of these people. And, we go back to Dan Nathan. Dan Nathan bought Baba a few months ago. Didn't go anywhere. Went down. He got out. And I swear from the day he got out, the thing has gone straight up. Okay. So this is a good way to watch, sort of, as we say, don't trade fade. If you're looking to get long Baba, wait until Dan Nathan gets out of his Baba and then you buy it, right? But I personally would not own Baba here.
Right here today.
No, I wouldn't. Does that
the
mean
risk
that it can't
versus
double
reward is
from
certainly
here?
not
No,
what it was a few weeks ago.
It could double from here. It just means Jason Shapiro ain't going to be a part of it,
Probably will. What do you think? What do you think is happening out there that nobody's paying attention to? Nobody's talking. You're listening to people talking about things all the time. Everyone's talking about Baba, as you said. What do you think that? What are you thinking about that you're just seeing nobody talking about?
Nobody seems to be talking about, other than you, in fairness, that the S&P is within 2% of an all-time high. No one seems to be talking about that, right? That the DAX, and I know you're talking about the DAX is on an all-time high. The Euro stocks, the FTSE, they're on all-time highs. The DAX and all those European economies, all we're told every day are horrible and have been horrible for 2 years, right? And I think that's an important thing for people to remember. The European economies probably are horrible.
Yeah.
What has it meant for the stock market? Absolutely nothing. We like to say on our Discord, don't over macro, because you would have had the macro totally right. Oh, I'm going to short the German stock market because the German economy is horrible. Okay, you were right. The German economy is horrible. And you know what? You're getting your ass kicked being short the DAX, right? Mm-hmm. So fighting the tape is stupid, right? I think that's kind of what I hear the least talk about, right? We have stocks that are, I'm going to use this word loosely, but overvalued, right? Palantir's trading at whatever, 8,000 times revenue. And, all these stocks, everything seems to be overvalued, right? We have an administration come in that is shaking the government to its core, right? We have tariff stuff coming out. Now we have inflation today, right? We have all these things, and the S&P is within 2% of an all-time high.
Yep.
Now, you can either say, well, because the stock market's stupid and they're missing out on what's really going on, and you can short it if you want to. Or you can say, maybe I shouldn't fight the tape. You know, for me, there's nothing to do anyway. You know, I've been since post-election, that post-election rip, I thought people were getting a little bit ahead of themselves, right? And it's not that I think positioning thought that people were getting a little bit ahead of themselves. So I think that kind of needs to maybe wind itself down a little bit, which every time there's a piece of bad news out, like today, winds itself down a little bit more each time, right?
Yeah, like last weekend it was the tariffs, and then before that it was the deep sack with the end of the AI, and then the market they just buy them.
Yeah.
Like, isn't that information?
I think that's information, yes. So, and I think that's what people aren't paying attention, personally, aren't paying attention to enough, you know? You can make these arguments, and I won't argue with any of them, okay? You can make them all you want. Overvaluation, uncertainty, make them all you want. But the market's been 2% of an all-time high. So I think that speaks for itself in a way, you know? Now let's see what happens today.
You know, Jason, I'm happy to share the list with you behind the scenes. We've never shared it publicly, but we've done a lot of work in aggregating the best people to fade on Twitter, right? Like just the worst humans on the planet that tend to be wrong. And we have like our list, and we've been working on that over time. And I've crowdsourced the list, put it out on Twitter, you know, and they've helped us aggregate this list. I know you are a keen observer. Any names? You don't have to throw anybody under the bus if you don't want to, but any names out there that you think are great fades on Twitter for those of us on social media?
You know, it's funny. We started a thing on our Discord just a couple of weeks ago where somehow we call it X fade. Somehow all of our people's favorite fades, their Twitter posts get automatically posted here. So nice. We have, I don't know most of these people, but we have our friend Gareth Soloway.
Yep.
We know that what's his face is the biggest fade on the planet. I didn't even allow him on here because just seeing his face annoys the crap out of me. What's his name? Lead lag report guy. I forget his name. But yeah, I don't want to throw them all under the bus, but I'd love to see your list so that we can put them on our list.
Yeah, we'll share behind the scenes.
Great.
Yeah, happy to. We could share notes.
Yeah. And again, I don't necessarily think it's about individuals. I think it's about consensus. If you think this guy's a great fade, and you think this guy's a great fade, and you think this guy's a great fade, any individual one could be right at any time. Dan Nathan caught the TLT today, right? But if all 10 of them are saying the same thing, well, now you've got something, right?
And I also don't want to tell them, because then we lose the data. Like my father's maybe the greatest contrarian indicator of all time.
Yeah.
I can't tell him. My grandmother also. Dude, Jason, you'll love this story. Years ago, I go to her house, my grandmother's house. She's 95 years old. She was probably late 80s at the time. And, you know, my grandmother, you know, I come into her house. She gives me a hug, right? This time, I walk into her house, and instead of giving me a hug, she runs into the kitchen, and she comes back and gives me the newspaper. And it was El Nuevo Herald, which is the Miami Herald in Spanish. And the euro is literally sinking in the ocean. And she's like, oh, el euro, huh? I'm like, holy shit. So I immediately run outside. I call Phil Perlman. You can ask him. I call Phil Perlman. I'm like, dude, we need to buy euro. We need to buy gold, silver. We need to fade dollars right now.
Right.
And that was summer of 16, if you recall what happened after that.
Yeah. I mean, listen, we're all fades.
I can't tell her, though.
Yeah. No, you can't. I have a brother that's the same, and I have friends that are the same. But you know what? We're all fades, including me. We're all fades. Okay. That's what it comes down to. Because the market is a discounting mechanism. And by the time you figure it out, everybody else, no one wants to admit this, right? Because they want to be smart themselves. But by the time you figure it out, and the newspapers figure it out, and the press figures it out, it's discounted in, you know? So we're all fades. Your grandmother, your father, my brother, me, you know,
high school buddies.
Yeah, everybody. And again, the important thing is when they all are saying the same thing.
Yeah. When my grandmother's asking me about this new currency, I'm like, abuela, it's not new, but I'm selling my Bitcoin. You know what I mean? Like,
yeah, no, that's right. That's right.
It's
My
all
mom
dumb
said that to
money.
me too. Do you trade these coin things?
Do I? Yeah, right.
No, my mom said that to me.
These coin things. Listen, I know the market's open. You've been really generous with your time. I want to leave with one more thing. You who's analyzing other people's behavior, trying to make money from other people's behavior. What about yourself? Like, how do you keep yourself in check? Is there like a Jason is too giddy indicator, or Jason is too depressed indicator, or are you just too mature that you stay balanced? Like, how do you judge yourself?
Yeah, I spend a lot of time thinking about that, but
Me
I
too.
don't know if I necessarily judge myself. Oh, I mean, I do. And the Jason is too depressed indicator would just be off the charts every day. So we can't go by that one. But I check myself by only trading the stuff that the data shows. That's, like I say, that's kept me out of a lot of trouble. I can get, just like everybody, I can get biased. I get one call from one friend who tells me he's buying the stock market here. I want to fade it immediately, right?
That's just like your gut reaction every time.
Yes. But having said that, if the data doesn't match up, then I'm not going to do it. The data is what keeps me in check. My brother called me up 2 weeks ago, and he is a lawyer and he lives in Seattle. So those two things alone, let us know what his political leanings are.
I was going to say, I'm sure he loves Donald Trump.
Yeah, right. What his political leanings are. And he calls me up and he wants to buy gold. He's never bought gold in his life. I told him back in, I think it was the end of 2023, I bought a bunch of physical gold. COT positioning was lining up. Other things were lining up. I went out and I bought a bunch of physical gold and buried it in my freaking backyard. Anyone who comes, by the way, we have a lot of cameras and gates. But, and my brother was like, what the hell is that? Why would you do that? Blah, blah, blah. Well, he called me up 2 weeks ago and asked me how I did it. How do you buy this physical gold? How'd you do that? I want to buy physical gold because I think Donald Trump is going to end the world and I got to be in gold. That was 2 weeks ago. He wants to buy it. So immediately I want to short gold, right? But I didn't because, I'm not going to do it based on that one thing, but it goes in your head as, hey, something to think about. And I don't think he ever did it, truthfully. I keep texting him, hey, man, did you ever buy that gold? It's making all time. I'm like pushing him to do it so that I can.
The day he does it, that's when you know.
And
right?
he might have done it by
when he finally capitulates.
He probably did it yesterday. He's like, oh, I'm going to visit my friend in Dominican Republic for a week. I'll do it when I get back. So that was a week. So that was like 2 weeks ago. So maybe he did it last week. I don't know. But yeah.
Jason, tell the folks where they can find you.
Crowdedmarketreport.com. That's our place. We're on Twitter. We're on YouTube. We got a lot of free YouTube videos you can check out and all that.
All right, rock and roll. Ladies and gentlemen, Mr. Jason Shapiro. Thanks, Jason. That was a lot of fun.
Peace
great.
out.
Great conversation.
Later, man.
Adios. I mean, listen, I have a very, those of you who know me know why it is that I appreciate his perspective so much. We think in very similar ways. He does a lot of things that I don't do. Like he's watching TV all day. Like I could never do that. Like could never. I stopped doing that. When did I stop watching TV? I must have stopped watching TV like in 2013. I stopped watching TV when I started doing so much TV. Is really the truth. When I realized what a
wait a minute, they're gonna let me on TV? All right, then.
When I started seeing how the shows were like created, because like I would sit there and do a show for a whole hour, so I would see how the show was built, and it would be like, hey, GE reported yesterday we need a bull and a bear for the debate, and then like nobody would respond. And then it would be like, JC, can you be the bull? And I'm like, well, I'm not bullish. Be like, well, we need somebody to be the bull. Anybody want to take one for the team? Like they're just making things up because they need to fill airtime, And like I started doing TV and they'd be like, all right, JC, what do you want to talk about? I'm like, all right, I want to talk about soybeans. I want to talk about the 10-year yield. And I want to talk about this uranium stock. They're like, we want you to talk about Apple, right? And then so I'd be like, well, then why the fuck did you even ask me? Right. So like I started seeing like the way the sausage was made. And, these producers and the hosts of the shows, they're not bad people. Actually, I can't think of a single person that I've ever worked with, either the producers or the and maybe there's a couple assholes, but for the most part, 90+% are just beautiful people, like amazing people. The problem is that the incentives are not to help their viewers. The incentives are not to help the audience be informed and make more money. The incentive is to distract investors from what's actually important, right? And so it becomes malicious because they're not dumb. These are very educated, very intelligent people. They know for a fact that they're hurting their audience, and they can't do anything about it because that's what pays the bills. Right?
I think about it as a constant tug of war between giving the people what you know they want, because they have the data, they know what people want, and giving them their vegetables that they need. They need the vegetables, but they want the other stuff, right?
Yeah.
So it's a tug of war. It's not easy, but the media is not stupid. They wouldn't write a million articles about Elon Musk if they didn't know that people click on articles about Elon Musk.
That's right.
Right? So
That's right.
they don't do it for their health. You know what I mean? So it's,
They need to do what they need to do so that the pharmaceutical companies pay them a lot of money. Because in this country, oddly enough, pharmaceutical companies are allowed to advertise on basic cable.
America and New Zealand, I believe, are the only countries where that's allowed.
Criminal.
Okay.
It's a criminal enterprise designed maliciously to hurt you. So you can either get hurt, or you could do what we do and try to profit from it and try to extract money from those who are most vulnerable that don't realize that they're against you, not with you, right? So it's a second derivative here, right, Jason?
No, I like that, because I think that's the difference with what we do is we're always just looking at the price action, saying what is, as opposed to, yes, I understand what people want. Yes, we can cover what people want to see, but giving them the real answers. And this is how you make money. Like in the end, it's about, do you want to have fun, or do you want to be right, or do you want to make money? And our goal here is to make money and help everybody else make money.
I thought Jason is a good example of that. Jason Shapiro just now.
The best
If
one.
this was basic cable, he would have to say something. Is that an extreme? You know what I'm saying? Like, he can just say there's nothing at an extreme right now. And that's the right answer. And that's okay. Right? If this was basic cable, something's got to be at an extreme, Jason, or come on or come on next time when something's on, right? Right? That's just
come
how
on
it
when
is.
you're fading something, and then we'll talk to you. And it's, the knowledge he gave us today for all the traders out there. This is how to look at trends. It's how to look at COT reports. It's how to look at short interest. Like, if you're a trader, like, you just learned a ton. It was a masterclass within 25 minutes.
That was very well said. A lot of the things he said, right?
Yeah, he really articulated all of that really well. So it's really exciting to just have those conversations with him, because he's the most I asked him a question one time and I said, Jason, are you a contrarian in all aspects of life? And he stopped the video and he said, hold on. He calls his wife and he goes, hey, am I a contrarian in every aspect of my life? And she says, ha, she just starts laughing hysterically. And the answer is obviously yes. And, the guy is very open about the way he trades and how he trades. And so I like the conversation. I love the questions you asked. How do you think about yourself? And then the real answer to a lot of things he says is we're all dumb money. There is no smart money. It's all dumb money. It's really, really a lot of good stuff happened in that interview. So always excited to have Jason on. He has a great name too.
What do we say we discuss a few charts? People in the chat are wondering why we're not talking about. We haven't brought up many charts, which is not like us.
I have a few charts to bring.
I brought a few. I even brought the Bash Brothers chart today, just in case you wanna tell the story.
Let's get there. I brought a few charts with me. 1, 2, 3, 4, 5. I got 5 charts with me. Let's start at the top, and then we'll work our way down. We'll make up back-ended, heavy. This is a exponentially weighted charts on this show, leaning towards the end. German DAX making new all-time highs with the Euro Stoxx 600, the broadest measure of European equities, including small caps, mid caps, and large caps, making new all-time highs. Germany, the bellwether in Europe, making new all-time highs. These are not things you see in downtrends. It's just math. They're not things you see in downtrends at all. New all-time highs. Go back and study every downtrend in history. one thing you'll notice is that you won't see too many new all-time highs. And then so the next chart there, Jason Shapiro talking about how I am one of the few people bringing up that the S&P 500 is one of a percent or two of new all-time highs. It's strange that I'm one of the few people that is talking about that. But I appreciate the shout out, Jason. Listen, this is an uptrend, guys. And if we're above that 5,600 level, then business as usual, nothing's changed. Look at the NASDAQ 100, also within a percent or two of new all-time highs, above 500, business as usual. Dow Jones Industrial Average, that 42,000 level that we've been eyeing on the Dow Jones Industrial Average, the next one there, Spencer. Ari Wald yesterday mentioned that exact same level. I've got people on Twitter getting mad at me, calling me a permabull, saying that this is a classic double top. I guess we'll see. I doubt it. Looks just like a regular uptrend to me, and above 42,000. That is still the case. And then last but not least, a one Dow Jones Transportation Average, not the CVS. The Dow Jones Transportation Average, Spencer, please. Would be great. Are we allowed to call them trannies again? I think we are. So the trannies are, have they been underperforming? Sure. Does it look like a massive top? Or does this look like a multi-year consolidation about to break out to new highs? Right?
And I like that, the people who always call out double tops every time anything hits a resistance zone. Like you could look at any chart and say there's a double top every other week. I mean, you have to understand, like, double tops. One, if you're really trying to trade those, you have to understand there's a time frame. You can't just look at it and go, hey, the last month we're hitting a new high and it's a 1 month high and it's a double top and therefore it's going to reverse. It's like Shapiro talked about earlier, having a system, a strategy that keeps you basically out of the gutters. I always call systems like, think of them like bumper bowling. Like bumper bowling, you're just trying, you can't end up in the gutter. And that's all systems really do, is kind of keep you within your strategy so you don't do dumb things like try to short every time something gets up near a resistance zone. So you can hang on to trends and stay long if you need to.
We're getting some stuff in the chat saying that isn't JC not the guy calling for a rug pull last February? Yes, I did think that a rug pull was coming. We saw some breadth deterioration. We put on some shorts. Some worked, some did not. And on February the 23rd, I said that the rug pull was postponed. And we're waiting for that rug pull. And maybe one day it'll come, but it's not anything that we've been looking for since February the 23rd of last year. So, yeah, in this market, the beautiful thing is you can change your mind, especially when the market proves that your thesis was wrong. So, yes, in fact, I did think that a rug pull was coming on. I put on some trades. Some worked, like that Lululemon short worked great. It was actually, it may have been the best trade I put on all year, as a matter of fact. And those profits made up for a couple of shorts that did not work. And we weren't even short. We had bought puts. But on February the 23rd, I specifically said, and it's all in the public domain, that the rug pull was postponed. So for those of you wondering what happened to that, no, we do not ignore it. I wish that I was better at changing my mind that quickly earlier in my career. I'd have a lot more money, right? You live and you learn.
Before we bring on Mary, it's been a minute since we talked about the hot corner on this show, but I want to do that now because we had a file link that I want to talk about. Whoa, well, there's Mary. What the heck?
Hey, Mary!
Oh,
I did not do that. Whoa!
Look at my shirt. Look at Spencer's shirt. Look at Jason's
I did not do
shirt,
that. Wait, what the hell just happened?
Shirt. Look at that. Look at that.
It's winter in Michigan. It's gray. So, I mean, I got to bring, a little life to
Wait, Mary,
stuff
did you,
that is
did you
outside.
just bring
I
your
did
cell phone?
nothing. I've been sitting here.
I didn't do that. All right, that was weird. I don't know what happened there.
The master of
Spencer, you could just say that you screwed it up.
It's all
and
right.
you'll do better next time. It's okay.
That was, in any case, I wanted to bring this on. JC, pop quiz, or Jason, or anyone. How many times has Berkshire Hathaway bought Occidental Petroleum in the last 3 years?
38.
9.
I have no idea.
38.
13. 15.
The answer is 30. 30.
Oh. wow, it's really, really well done.
yesterday
I thought it
was
was a little
the
bit more than that, but okay.
Mary was the closest without going over. So
yeah, that's right.
Ah!
Yesterday was the
Price of
30th.
Right rules. Yeah.
Another Berkshire buy. Another Berkshire buy. We are now up to how many shares? 265 million shares of Oxy going back since 2022. So
It's a lot of shares.
It's a lot of shares. Still not making any money, Uncle Warren.
This is every buy, every yellow circle right there.
This is a great example. Just because Uncle Warren is buying stocks doesn't mean that the stock is going to go up, number one. Number two, just because Uncle Warren has a relatively large cash position doesn't mean he thinks the stock market's going to go down. In fact, every time Uncle Warren has had this much cash in his portfolio, stocks have done very, very well for years to come, as a matter of fact. And the lowest amount of cash, the smallest amount of cash that Uncle Warren has had over the last decade was at the end of 2021, right before the market completely fell apart. So if you are following Uncle Warren's cash levels for your personal buy and sell decisions, you're an idiot.
Yeah. And also, he's not you, you're not him. He is investing for the long term, even though he's 91 years old or whatever. And he has said the reason that they have cash is not because he's bearish on the market or the economy. It's very simple. He doesn't know where there's a good deal right now. He's all about getting a good deal, right? He doesn't see any good deals. So he raises cash. That's simple. When he sees a good deal, he'll spend it.
And I think that's great. It's a great point, Spencer. Just like Jason Shapiro was saying, it's not for me. I'm going to miss trades. That's okay. Uncle Warren's saying the same thing on different time horizons.
Yeah.
Yeah, that's okay. Uncle Warren has become one of the richest people in world history by missing a ton of trades every day, right?
Yep.
Let's be serious.
Well,
Mary, what do you got?
Hey, what do you got?
Well, so first and foremost, I've got news. I know you guys all know this, but it's been a couple of weeks since I've been on the show, and since that time, I got some very exciting news.
Boom!
Level 3 check done. Thank God, because I am too old to try and remember this stuff. I'll tell you what, I was having the conversation with the analyst team yesterday, I'm not even gonna say my age, trying at my age to teach myself something new and retain the information. I mean, I had flashcards and it felt like every couple of days I'd go through the flashcards and I still couldn't remember things. Like the memory deterioration as you age is a real thing. So I am so happy to have completed level 3, done with the test. I hope to God I never take another test in my life. So this was a huge sigh of relief. So level 3, done, check.
Congratulations, Mary.
Thank
and the
you.
same advice that I give to all other freshly minted CMTs, and yourself included, is that now is when the learning actually begins.
So true.
Right? Now,
so very, very true.
You just have the body of knowledge, right?
Yep.
Now is when the learning actually begins. Now, you obviously have been trading and learning before you did the CMT, so it's not exactly precise, but this isn't the end. It's just the beginning.
I couldn't agree more. I even said the same thing to my family. Like, now I've got this wealth of knowledge. Now it's actually the application, and we all learn by doing. And so I know that there's just a huge runway of growth and learning that's going to happen going forward. So I'm excited to see where this takes me. And thank you to everyone on our team and all of our friends that have kind of helped push me through this process and help mentor me. So this was a really big deal for me and couldn't be happier.
All right. So what do you got, Miss CMT?
So I brought a couple of charts along today. I wanted to start with DE. So this one I got involved with that's CrowdStrike. Yep. Okay. So DE just got involved in this one because we were breaking out above, several years of just consolidation. What I love about this chart, I've got the RSI down there at the bottom, never hit oversold. I mean, not even close over several years. And so just felt like accumulation. And now we're breaking out, of course, with the CPI this morning. Now everything's red, but not everything. But And now I kind of feel like, I hope this doesn't fall back into the box. But I just got long this one, and we like to buy high. We like to say we like to buy high and then sell higher. So I think it could be go time for this one. And a lot of charts are actually looking like this. One, I didn't bring this chart, but one in pharmaceuticals. I know you guys were just talking about that. AXSM, same multi-year kind of consolidation base that's been building and just recently broke out. That's a really great looking chart as well. CrowdStrike, kind of a similar story there. So just got involved in this one, got a little base on base. And, as long as we stay, what is that, about 400-ish? Like this one's still to the upside. But again, I don't know. And this is where, the lack of trading experience comes into play. We've had the hot CPI print, and now how's the market going to digest that news? And am I going to get shaken out of these positions? I don't know. We'll have a better idea probably by the end of the day or the end of the week. But I love the chart. And the other one that I brought along was you guys were talking about, you've been talking about Europe, and also you mentioned the DAX earlier. So just a couple of days ago, I started kind of poking around in more of the European stocks, just because I'm so heavy, one in China, which has been a great trade, and also in basically just US stocks. And so I pinged Steve last night, brought along the chart for Deutsche Bank, DB. And this one, I thought, this is a monthly. So this base that has been setting up for a number of years, I put a VWAP anchored from the all-time high, and it comes right in at that same polarity zone from, what year is that? Way back when? 2008. Well, so yeah, great financial crisis. And so we're right back there. And I wanted to get your thoughts on this, JC, just because, this is one that I hadn't traded probably since 2020. We talked about it for a time in All Star Charts Premium. It was during the time of Credit Suisse, and when that went to zero. So it was just something that I've not looked at in probably a couple of years, and I was really surprised by the space. And if you look at it on the weekly, Kenny would call this the Andy Dufresne pattern, but the RSI, great bullish divergence there in the RSI on the monthly. There's same thing on the weekly, and I'm going to be looking at this one to go long. If we get above that 2021 and that anchored VWAP, it's not a super sexy name, but
European banks breaking out to new decade highs, highest level since the great financial crisis, is not
right?
bearish. It's
not bearish.
Evidence of breadth deterioration. I don't know where these people are coming up with weak market breadth. Like these serial killers are telling me every day that it's weak market breadth. I go in and look, and it's the exact opposite. It's breadth expansion.
Right.
So anybody who's telling you that market breadth is weak and deteriorating is lying to you.
Yeah. So yeah, when you're looking at charts that you haven't looked at in several years that are now looking good again. Yeah, totally.
Well, I look at Deutsche Bank almost every day, but that's
okay.
To me, it's like a bellwether, a bellwether of shitty stocks. It's like the shittiest of the shit in terms of European banks. So the way I look at it, if Deutsche Bank is going up, how bad could things be?
Not bad. Exactly.
Right. Probably not bad. Right.
Not bad.
Well done, Mary. Well done. What do you say we do a little recess and get back to work, Spencer?
We can do that. I have a question for recess. Yeah, sure.
Just wanted to share some cards I got yesterday. I got a Donovan McNabb rookie. I got a couple of Tristan Casas. It's my little cousin. Believe it or not, Tristan Casas is my little cousin. I got like 3 of his rookie cards.
You're related to him?
Yeah, he's my little cousin. I mean, my huge little cousin, like my younger cousin, I should say.
He's hilarious.
I know. I got an Anthony Richardson rookie card. I got some Tuas. I got an Adrian Peterson. I got a Jalen Hurts rookie.
Cool.
For
nice.
$2.
Here we go.
I thought I did pretty well.
Yeah.
Shaq rookie. See, Tristan Casas.
He's very funny.
You need to hang out with my son. He's super into the cards, football mainly, and he would love to see your collection, I'm sure. So yeah, he's the little collector as well.
I got a Lawrence Taylor.
I have a question for everyone. And my question is, how often do you change the air filter in your house?
Once a quarter.
Once a quarter. Holy shit. Okay.
Yearly. I mean,
Yearly. Okay.
I wish it was more like JC, but yeah.
They say monthly, quarterly's enough, so I do it quarterly.
All right. I'm overdue. Let's put it that way. I'm overdue.
Yeah, you got to put it on your calendar. Yeah, because I've forgotten, and then like the guy comes, the HVAC guy comes, he's like, you just got to clean your filters, bro. Your AC's fine.
Yeah, I suspect that's why I've had this lingering cough, is because my air filter is probably disgusting. And 2 months, Phil says. Oh my god! All right,
yeah, 2 months. Phil's probably right. 2 months is probably right.
I gotta get my act together. I gotta get my act together. Okay.
1 month is too aggressive. 3 months is probably leading to a little slow. 2 to 3 months. Dawson's right.
Okay.
Dawson's right. Yeah.
Jason, you and I got to get our stuff together.
I know.
Yeah, okay.
I just thought about this the other day. Yeah.
Step it up, guys. Come on.
All right. Okay.
Yeah, the husband job. I have no idea.
All right. What do we got? Tomorrow's show. You know what we got on tomorrow? We got Jeff Mackey on the show tomorrow. So tomorrow's gonna be like Jeff Mackey Day, in more ways than one. So we'll talk about that tomorrow. Thanks to Jason Shapiro for hanging out. Hey, Jason Purr, thanks for hanging out. We always appreciate that.
See you, Jason. I brought my mug for you.
Oh, thank you. I brought one, but it's not as cool. It's the B mug JC was talking about it the other day. So I got the B mug.
He's like a 1987 Daryl Strawberry.
Nice. That goes over
last one. I got
Mary's
a Jim
mug.
Marshall. This is the guy who ran backwards. He picked up the fumble and ran the wrong way.
Oh, that dude.
Oh.
So I thought that was a good pickup for $3. Jim Marshall.
All right. See you guys. Go make some money. All right.